Good evening and welcome to tonight's webinar where we look at member-only content for ASX investment opportunities in review for the 12th of July. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service which incorporates our model portfolios across the ASX and the US markets, as well as an ASX and US high conviction portfolio, an independent portfolio where we can work in partnership with you on specific ideas, and we utilise derivatives to enhance portfolio returns. If you'd like to know more about our broking account service, please contact me on 1300 614 002. The technology that I'm using tonight is the Investor Signals member area. You can subscribe to it for $1,320 for the year, and if you're joining us as part of your 30-day free trial, don't hesitate to contact me in the office for some tutorial and guidance on how to set up the model portfolio features. The table on screen is something that we look at periodically, and coming into the June quarter earnings, we've got the US banks reporting this week, kicking off US earnings season, which will run over the next 4 weeks. The table here, the part that I just want to refresh your memory on and focus is 2018-2019 earnings for the S&P 500 were running at roughly around $160 of earnings per share, and at that point in time the index was trading at around 3,000 points. As we've accelerated out of the 2020 trough in earnings, 2021 earnings, the expectation are for them to deliver $175, we'll just call it round numbers there, and into 2022 the market's looking for that to accelerate up to $200 of earnings per share. So another way to look at it is this table at the bottom here, which is a screenshot from CNBC. In 2020, roughly the earnings dropped to around $140. In 21, this is the expectation, probably up a little from some months back when I took this screenshot, but now at least $175 of earnings per share. And in 22, as I mentioned, accelerating up to 200. When you think about where the index is trading at the moment, 4,300 points for the S&P 500, we've certainly priced in as a minimum that this is where we're heading. So the relevance of this is as we progress through the June quarter earnings and we start to have a look at what those average earnings are, it starts to give us a bit of a guideline as to whether the earnings growth is fulfilling the expectations of the market. And that's something I'll continue to update you on. We continue to watch the Nasdaq as a bit of a leading indicator. It continues to make higher highs and higher lows. The shorter term look at the market is that we had sort of 1 day below the average, and we'll take a closer look at this in a moment, and then it rallied back above. So we've seen bullish buying momentum obviously right throughout the recovery in this technology area, and it continues at the moment, and we're seeing US interest rates, especially on the longer end of the yield curve, move downwards, and we've seen them fall in roughly over the last 2 months from 170 basis points down to about 130 basis points. The Nasdaq, looking at it from a long-term perspective, this just puts into context the strength of the rally that we've had post-pandemic, with the index almost doubling in value. But over the last 10 years, the growth in the technology area obviously has outstripped any other area part of the market. The concern here is, are we getting into bubble territory, or an area where the market is susceptible to a risk off, and it may, whether that correction in technology ultimately ends up being a matter of consolidation where it moves sideways and valuations get to catch up, or earnings get to catch up as a result of that, or whether there's a more material shorter term pullback. The importance of looking at this index and tracking it relative to the average is simply that it gives us a bit of a leading indicator as to any weakness that starts to develop, and that can then give you time to sort of shift your allocations in portfolios. So at the moment the index is back above the average, and I'll draw your attention to it on the blog if we see a break below that. Moving into a closer look at that Nasdaq indicator, and I'll just again draw those parallels with the earnings of the S&P and the index in a moment. But here we are on the Nasdaq, and if we just roll out, this is at an index level rather than the futures. So on on Thursday night we had the week opening, but the market rallied back towards the close, and then on Friday night we've had a strong trading session with the market back above that average. So coming into US earnings, a combination of the Nasdaq being back above the average and the S&P 500 having a similar pattern where we only had the 1 day sort of trading below the average, then a strong night on Friday night. The setup, you'd have to say, is reasonably bullish coming into this week of earnings for the US banks. From an algorithm standpoint, just to use this as an example, let's have a look at Citigroup. This is under algorithm buy signals. The BNKS was something that I put on the blog this morning, which is the Global Banks ETF. So what I'll be really interested in as we see these results come through for Citi, Wells, JP Morgan, the two banks that look the strongest are probably Citigroup and JP Morgan. What we're looking for is these supports here to hold. So in the case of Citi, they're at around that $65 level. If we look at that in JP Morgan, we're looking for the low here at around 145 to hold, and whether this continuation of the strength that we saw on Friday night is a leading indicator regarding the buying interest coming in to these. And just whilst we're on the topic, to have a closer look at that banks ETF, we see it here, it's corrected. So this is exposure to global banks, but obviously the likes of JP Morgan and Citi make up a large amount of the index. We've had the correction there from around 720 down to 640. It's under algorithm buy signal. The stochastic's turning positive, and you just want to run a stop loss on a break back below that 625. So that just gives you a bit of a backdrop as we come into US earnings. In next week we'll start to look at some of the industrial names in the US, but for this week the focus is the bank stocks. Tonight what I wanted to do is move through the ASX top 100 and highlight to you the opportunities that I see in the market at the moment. So we get the percentage gainers to the top here. Organise it by buy signal, so we're going to be going through the best performing stock today by percentage gain, which is under algorithm buy signals. We'll get part the way through the list here and it'll shift from buy signals to sell, and I'll just draw your attention to that. Within those names that are under sell signals, there are one or two counter trend trades that I think are worth focusing on. So we click on the first code, Endeavour Group, a spin-off of Woolworths, and I click on the arrow to now start moving through the list. Fortescue under algorithm buy signals, we continue to remain bullish on Fortescue, as is the case with BHP. It's under algorithm buy signal support there at around $45. The resources is clearly the strong sector of the market. So whether it be, our focus is BHP, Fortescue and Oz Minerals, and also the ETF which is under algorithm buy signals, which is OZR, and I'll have a closer look at that at the conclusion tonight. The real estate investment trusts continue to perform well, but our positioning in portfolios is to own SLF. Oz Minerals, we've been patiently waiting for this to pull back to buy signals at around $22. There's support, and we're happy to buy that and just think about running stop losses below these pivot lows. But Oz Minerals under buy signals now added into the model portfolio. Linus has performed well since shifting from sell signals, which is again, if you're joining us for the first time as part of your 30-day trial, the sell signals, the red box up at the top there, the green box is the buy signal. As soon as it switched from sell to buy, you'll find the stock added into the model portfolio. So Linus was performing well. BlueScope under algorithm buy signals, $20 there was the last signal, and the stock now pushing up towards $22. And obviously a lot of these companies we're going to starting in early August, we start to see the earnings results either for the full financial year or for the 6 months through to June, and we'll begin to focus on what that earnings growth looks like relative to the last reporting period or to the prior 12 months to help identify those companies that have strong earnings momentum that we want to focus on. Lendlease is a recovery opportunity. I've been suggesting here that you think about buying call options. as a way of getting exposure to this and limiting your downside. If you'd like to talk to me about the strike price and the expiry date that we're focusing on there, give me a call in the office and I'm happy to walk you through a couple of examples there. But owning Lendlease and taking a 12 to 24 month view, I suspect we see that stock much higher. Goodman Group, fabulous business, great earnings growth as I keep highlighting, but it is expensive. It continues to march higher. The market's almost getting to a point where it's disregarding the low dividend yield and really is just focusing on the growth opportunities here with Goodman. We are seeing GPT, just as a reminder, repositioning their portfolio as well to focus a lot more on these online fulfillment centres as a commercial property play. So GPT should start to see the benefit of that portfolio repositioning over the coming years. Goodman Group clearly still the leader, best growth opportunity within the REIT sector, and if you don't already own it, over the next 3 to 6 months you'll see a pullback and another algorithm buy signal, and it might be an opportunity to look at it, but certainly one of the better performing stocks in the portfolio. Xero we like, high quality tech stock, one of the preferred technology plays within the ASX 100. Evolution preference remains Northern Star, and as we've seen the long end of those bond yields pull back, as I mentioned earlier in the recording, we're seeing gold rally again, pushing up through 1800, and that should set up a pathway for Northern Star and Gold Road Resources, which has recently shifted buy signals. Seek, we continue to like this, but it is expensive. Stocklands, we hold that in model portfolios. Incitec Pivot, recovery trade, should we see better earnings in the second half, you want to have some exposure to that. Domino's, expect this to be a good earnings result when it comes through in August, so we'll continue to like that. Northern Star, this is something that if you don't have gold exposure, adding Northern Star now. If you want to leverage that position up, you could certainly think about buying call options, and I'll highlight the call option strategy on the blog tomorrow, but it's a way of getting exposure to further upside without taking on more stock. Northern Star, so I like that. South 32, preference is still Fortescue, BHP and Oz Minerals over South 32, but just highlighting that it is under algorithm buy signals there at $2.75, now pushing up towards $3. IGO under buy signals, performing well. Downer, take another look at this on the sell-off. We saw one of the investment banks downgrade their price target for Downer. So we've gone from the market being bullish with an expectation of 8% earnings growth, and we're seeing some analysts get a little more conservative on what that number looks like, but I'd still be inclined to be a buyer of Downer on this dip. CIMIC report their earnings over the next week or two. They're one of the companies that should report earnings ahead of most of the market as far date wise. I'd expect that actual earnings result to hopefully be a positive catalyst to drive an inflection point in what's been a fairly prolonged sell-off in CIMIC. But Downer we like under algorithm buy signals. Sydney Airports, we continue to like that. Afterpay, a little expensive, but high quality growth, but certainly expensive. Within the financial services space, our preference still remains Macquarie, and it's under algorithm buy signals from around that 145 or 148 level. GPT should continue to grind higher, but as an alternative, think about SLF. Beach Energy, preference remains Woodside, but Beach is under buy signals. Mirvac under buy signals. Cube Holdings, have a think about this, the correction from 325 down to 294. Watch the stochastic, should start to turn positive. If you want to be a little more conservative, wait for the price action to trade back above that 10-day average, but the sell-off there in Cube should present a buying opportunity. Aurora, just getting a little expensive, supported by the company doing a share buyback. Commonwealth Bank preference is Macquarie over CBA, but CBA is under buy signals. Computershare, I'd highlighted that we like this, but it is getting a little expensive. We're seeing some correction from around $17.50 down to $16. Maybe like to see that down a little bit further around that $15, but both Link and Computershare, the fundamentals remain reasonably supportive for their businesses at the moment. Wesfarmers, one of our highest weighted stocks in our model portfolio and in our managed fund. It's performed extremely well. We continue to hold a large exposure there. Cleanaway's corrected now from around this 290 level down to 255, which is around our target. We started adding this into the high conviction portfolio today. We do like the long-term thematic there, so continuing to buy that on any algorithm pullback. Altium, high quality tech company. We saw the takeover bid for Altium from Autodesk with Nasdaq listed company, and the stocks remain well supported around that bid price. Center Group, under algorithm buy signals, really bumping along sideways. Aristocrat shifted from sell signals back in May last year into buy signals around November. The stock's performed very well since then, and we'll take a closer look at the upcoming earnings results there. Woodside Petroleum should find support here with oil above $70 a barrel. So if you don't have energy exposure in your portfolio, Woodside's certainly one way to capture that. WiseTech not doing there, but it is under buy signals in the model portfolio. Treasury Wines under buy signals, had a slight pullback below the average, now pushed back above it, but performing well. Woolworths, think about this as an income contributor to portfolios. You can own it, sell covered calls over it. You're generating 8 to 10% cash flow from a relatively low defensive yield, a low defensive or defensive earnings stream. We'd expect Woolworths to deliver somewhere between 5 to 8% earnings growth, which should support the share price at around that $37 to $38 level. Dividend yield is compressing down to low 2%, so I don't know that there's too much outright performance for the share price above the current levels. IDP Education under algorithm buy signals, it's performed extremely well from $19 up to almost $30. Harvey Norman under buy signals, performing well also. ALS under algorithm buy signals had a very good rally. REA Group, terrific tech business here, but is expensive as I've been mentioning at 60 times earnings. Have a look at it on the next algorithm buy signal, wouldn't chase it where it is at the moment. Link, have a think about this as it pulls back. If we saw it somewhere between that $4.50 to $5 range is a buying opportunity. Santos, preference remains Woodside. JB Hi-Fi, a little bit cautious on consumer spending for obvious reasons at the moment. Cochlear performed extremely well since switching to buy signals at around that 200 level, now pushing 240. We'll have a look at that on the next buy signal. Lumina not doing there at the moment. Metcash performed well, but is getting a little expensive and only 2 to 3% earnings growth. ResMed's performed extremely well, a bit expensive up here at the moment, so just be patient, wait for a pullback, and I'll highlight that on the next algorithm buy signal. Tabcorp's one of the stocks that's recently shifted from sell conditions into buy conditions. I put a post on the blog last week about the demerger or the splitting of the lotteries business from the wagering business. That should help to stabilize value for shareholders, and we're happy really to be a buyer of Tabcorp on this pullback. I don't rate it as an overweight position in portfolios, but it is something just to have a think about because of that demerger, maybe helping to unlock value and setting up potential takeover for the lottery business further down the track. Challenger under buy signals, but preference remains Macquarie. Oil Search under buy, but preference remains Woodside. Crown switched to algorithm buy signals on this sell-off. We've had the correction from around $13.50 down to $10.80. Obviously tough operating environment, whether it be for Star or Crown at the moment. Crown's obviously got the double negative with issues around their licensing review, but ultimately the pandemic related slowdown at the moment is unlikely to deter corporate action and those takeover bids that are sitting there, whether that be a merger with Star or whether it be Blackstone Group out of the US making a full takeover for Crown. So I do think there's opportunity there. It is a high risk speculative play within the market at the moment, but owning Crown is something you could certainly have a think about if you're willing to take a 3 to 6 month view on it. Soul Patterson's performed well since shifting to buy signal. Star Entertainment now under buy signal, but I get less excited about Star. Obviously the opening of the casino up in Brisbane, $3.5 billion project that they're doing up there, is impressive and a bit of a game changer for Star. But right at the moment I'd be more inclined to look at Crown as an alternative to Star. Mineral Resources, so now we're under stocks that are under sell signals. We'll be patient here, wait for a pullback over the next 3 to 6 months. Preference remains BHP, Fortescue and Oz Minerals within the resource space. Some of these that are under sell, I'll just skip through these fairly quickly. I'll focus on the names that we want to have a look at as counter trend trades, and then I'll conclude tonight. CSL, keep an eye on this. Analysing this today, the expectation is for about 10% earnings growth. We've had the stock make a higher high, we've had the higher low, we haven't yet shifted into algorithm buy signals, but that may be we may be pretty close to that. But around this 280 level, it's generally been support over the last 12 months or so. So we may be getting close to a point where CSL, so one way to think about this would be either to track the stochastic or just go long CSL whilst it trades above that moving average. But if you don't already own it, maybe just take a closer look at CSL and take note of what I put on the blog around it. Regional banks, still a bit cautious there, still a bit cautious on some of these housing or building material stocks. I think maybe the bulk of the rally's complete in those. Magellan, okay, just rolling through. These are all under sell signals, so they don't make up part of the model portfolios. So our focus is the stocks that are under buy signal. Still think Insurance Australia Group is a good counter trend trade in the market, and maybe another way of thinking about this is owning call options, which we don't at the moment, and it will be one that I'll look at increasing our exposure to via call options, and I'll update you on the blog regarding that. So just recapping there, that Insurance Australia Group, I see that as a counter trend recovery trade. Reliance, a little bit expensive, so we're not doing it there at the moment. We've covered the shorts for the moment in these banks, so we're no longer short Westpac and NAB as we were leading into these US bank results. Newcrest, so still like gold as I mentioned. Have a look at Northern Star and Gold Roads. Car sales, good business here. The rally, I wouldn't chase it. If we see a pullback, maybe back down to around 1850 and a switch to buy signals, we'll take another look at adding that into portfolios. And again, all these are under sell signals, so we're just moving through these, highlighting Fisher Paykel. I like the business, just a little expensive. Amcor, so this is a counter trend trade. Now, to put that in context, I don't think the upside for the stock is material. I say counter trend just because it is under sell signals, being the primary red box up the top there, but the interim or the shorter term signal there you can see is a green arrow. Why I'm attracted to Amcor is they're still benefiting from cost synergies from the Bemis acquisition. The management's guided towards 10 to 14% earnings growth. The stock's on roughly a 3% dividend yield. 10 to 14% earnings growth in this market from a relatively defensive business looks attractive. So again, this is one that you could own and sell covered calls over, or you may just choose to own it coming into the upcoming earnings result. I've got Amcor delivering earnings starting that week of the 9th of August, so I'll review those results as they come through, but continue to like Amcor. Sonic, terrific business, just a little expensive, and we'll look at that on the next pullback and switch to buy signals. Boral, takeover bid there from 7, which underpins Boral. Transurban, maybe just avoid this just for the moment. I think sort of within the infrastructure space, probably Sydney airports maybe, but you're giving up a lot of ground there given the stock's already rallied up towards the takeover price. Transurban sub $14, maybe start to have a look at that if you don't already own it. Reece, cautious with that on valuation grounds. Ramsay, last week that made a takeover bid for a large UK hospital group. I haven't seen an update on that today, but we'll continue to watch that. Ramsay's really, when you think about it, consolidated sideways at around this $65 level for the most part of the last 12 months. I suspect that we do have supported around that $60 to $63 range, and if they manage to finalise this takeover of the UK hospital group, I'd expect that we're looking at a consolidation range here, which later leads to a break to the upside of that sort of $60 to $70 range. ASX, we continue to like that, but highlight that it is under sell signals. As with Telstra, we like Telstra, but it is under sell signals. APA may be getting a little oversold down where it is at the moment. Next DC, remain cautious on that. Brambles, I don't think that downside risks are substantial there, but up at around 1150 is back to fair value. Ansell maybe getting close to resistance where it is at the moment. Coles, preference Woolworths over Coles, but any correction lower in Coles, we're happy to take a look at buying the dip there. So we've rolled through the top 100. What I wanted to conclude tonight with is just to recap the stocks where I think there's opportunities for you to focus on. So Incitec pivot as a recovery trade, we like that. Woodside Petroleum, if you're looking for energy exposure in the portfolio, support should be around that 2250 level. Northern Star looks very attractive in an environment where US interest rates are moving lower and gold starting to rally back up through that 1800 mark. As an alternative to Northern Star, or to complement Northern Star, you could have a think about Gold Roads. It's switched to algorithm buy signal there at around 125. Within the financial services space, continue to like Macquarie on a relative basis to other names. Cleanaway traded into our target today. I've been highlighting on the blog that just be patient, wait for it to pull back around just below that 260 level. So we've started adding that now. We've got capacity to continue to add to that position if it does trade a little bit lower, but getting down to a point where we're comfortable to now start adding exposure to Cleanaway. Lendlease, I like this as a long-term recovery, and my preference is to own call options rather than have a large stock position there. Rather than Star, think about Crown. Amcor we've covered, I don't think I need to review that. And Oz Minerals, again just a recap on the resource side. Fortescue, BHP, Oz. If you want to go an ETF, have a think about the OZR, which is the Spider Resources ETF. So it's under buy signals there. You can see the highlighted green box at the bottom there at around $13. So if you went to the model portfolio, clicked on all ETFs, you'd expect to see that ETF added in recently, which is the OZR just there. So you can see it was added in on the 21st of the 6th at $13.26. It's now up 7.3%, and these are the more recent ones that have been added in. And obviously you can scroll down and look at ones that have been in the model for quite some time. In addition to that, if you look joining us again for the first time, so model portfolio, come across here, whichever model you're interested in, whether at the 20, the 50. So we've been looking at the top 100 tonight. Days held, get the least number of days to the top. So recent additions to the top 100 model being Crown, Tabcorp, which I spent a bit of time on some of these tonight, and again you can scroll down through that list there. To conclude with a couple of ETFs, the AZR I've covered. So the Asia ETF, which is the Tiger Technology ETF, we're seeing weakness in some of these tech names around concerns of regulatory influences from China. I still have the view that that creates a buying opportunity, so we're buyers of this Asia ETF on this sell-off. Likewise with Cure, which is US biotech. This at around the $60 back in a buy range, and we've started adding to that again. SLF, I mentioned earlier in the recording, is our preferred way of having exposure to the property play. That continues to grind higher. IZZ, we don't own too many positions which are counter to the algorithm, but IZZ we continue to retain our long China exposure. And domestically, if you're looking for inverse ETFs, just a reminder, if you're wanting to track something that's going to go up in value, if you see, for example, the Nasdaq trade below that 10-day moving average, something like this, the Bear ETF, which is an inverse ETF over the XJO, it'll go up in value 1% if the XJO goes down. That's certainly not the focus at the moment, given that the jumping back into the index, and I'm into my watch list here, given that we're approaching the start of tonight's session in the US with a recognition that we only had sort of that one day of weakness at the end of last week. Friday was strong results, and we're leading this week of earnings with Citigroup, JP Morgan, where we'd expect those numbers to be reasonably solid. If we see a reversal in the US sentiment, and I'll highlight or draw your attention to that on the blog. Thank you for listening in tonight, and don't hesitate to give me a call in the office if you'd like to discuss the technology or the broking account service, or for that matter, if you're interested in the covered calls, if you're interested in either the covered calls or the long calls, which is a stock replacement strategy, which is an example with Lendlease. Again, happy to walk you through a couple of examples over the phone. Thank you for listening, and I look forward to speaking again next week.